Very good morning, dear students. Today we'll do the last unit of the subject, that is Unit 4, Capital Markets. So, what do you mean by capital? Capital means finance, okay? And market means a place where you get this finance. So, capital market talks about that particular place wherein you can buy and sell financial instruments or financial securities. Now, when you talk about any capital market, we require to understand that capital market has a division. Okay, it's divided. So before understanding capital market, you need to know that there is something called as financial market. Financial market is where you get all financial instruments. Now you know that there's a fish market. Okay, so when you say fish market, you buy and sell fish in that market. When you say vegetable market, you buy and sell vegetable in that market. Same way here, when you say financial market, you buy and sell financial securities in that market. Now this market is divided into two, capital market and money market. When you say capital market, it is a long-term lending market. Okay, so if you want to buy and sell securities for a long period of time, you go for capital market. It is governed by SEBI. Governed means what? It is scrutinized, it is taken care, it is authorized by SEBI. What is SEBI? Securities Exchange Board of India. Very important. SEBI is like the principle of financial market. So if anything goes wrong or anything has to be issued or any new securities have to be floated, every authority is with SEBI. Even if there are any frauds, all the companies go to SEBI, that is Securities Exchange Board of India. Same way like the capital market, we have money market. It is a short term market where again it is governed by RBI. Who is RBI? Reserve Bank of India. Okay. So when you talk about a short term market here, as you know, you get commercial paper, certificate of deposits, treasury bills, all these short term lendings which are ranging from few days to months. You can buy and sell them in money market. Now for your benefit and for your understanding, you have to study capital market. So this unit is all about capital market. Now this capital market is divided into two, primary market and secondary market. In the earlier slides that I taught you, or in the earlier chapters that I taught you, I mentioned about primary and secondary market. Today we'll study this in detail. So primary market is also called as a new issue market because new securities are issued, or the first time the securities are issued. Secondary market is also called as the issued security traded market because here market, or it's a place where you buy and sell securities which are already issued in the primary market. This secondary market is also called as the stock exchange market. When you talk about secondary market, it is different from primary market. How it is different, we'll study in detail. So when you talk about a primary market, you always need to remember that in primary market, primary being the first time. Okay, so when you say first, it means primary or the main. You need to consider that there is a company. Now when you have a company, this company may go to a platform that is the primary market in case you need certain loans. So imagine this is a company, okay, company A. Now this company A decides to start its business. Now it has taken loans, okay, it has taken loans from banks. It has put the proprietor is putting their own savings. It was already having certain funds but requires more funds, so it goes to primary market. Now When you talk about a primary market, this particular company can also go in to the primary market in case it's an existing company and they want to expand and need more of money. Now, when I speak about primary market, this is the first time that the company goes public. It means what? The company has always been a private company. Okay, there's never you hear normally a company said private limited. It means what? It is a private company. Now, when you say public company, the company is open for public to invest in. So now in this case, the public will get a chance to get a share in this company. So the company will go to the primary market and issue these shares. These shares will be purchased by an investor. In return, the investor will pay money for the shares that it has purchased. So primary market is where a market where the shares are issued for the first time. Now let us understand the features in detail. As I told you, it's a place where there are new issues. Anybody wants to issue equity shares for the first time, they will issue through primary market. If they want to issue the second time, then it will not be called as a new issue. So you need to understand, when you speak about new issue, there are two things, that is IPO, initial public offering, and FPO, follow-up public offering. Now imagine I have a authorized capital of 1 lakh, and out of 1 lakh I have something called as a share capital. You must have understood authorized capital is a capital that you have in a particular company which is mentioned in your memorandum of association. So you have this much of limit. Out of this authorized capital, you decide to issue a share capital of, say for example, 50,000. So what does this capital become? Issued. Okay, issued capital. When you want to issue this capital, you will go for an initial public offering. Now 50,000 is still a balance. Okay, so when you go and you later in a future date, if you want to issue the remaining 50,000, that time you will go for a follow-up public offering. So first part which you issue is called as the initial. The remaining several parts in which you want to issue, you can go for a follow-up public offering. So now this capital is issued. Then you will have the public investors who will subscribe for these shares, and finally they will pay the call money, and then this capital will be called as issued, subscribed and paid up capital. So when you speak about new issue, you are talking about this issue which you make for the first time. Now when you talk about primary market, okay, unlike secondary market, this primary market has no particular place. Okay, no particular place in the sense it is no stock exchange as such. There, here in primary market, banks can act as an intermediary to float this primary issue. Now banks are a place where the prospectus will be available whenever a new issue is taking place. Whenever you want admission in a college, what do? You go and take the prospectus of the college. The same way here, they will keep certain banks in charge to issue or give the prospectus away so that people can come and subscribe. So there is no particular fixed place. These banks can differ. Now as I told you, first comes the primary market. Only once the shares are issued for the first time, then those shares can be traded in the secondary market from one investor to another. So remember, in secondary market, there is a relationship between investor to investor. But when you talk about the primary market, there is a relationship between the company and the investor. So the company is issuing the shares for the first time. Now whatever buying and selling takes place in the secondary market is none of company. The company doesn't come into picture there. Then the company receives money and issues new security certificates to the investors. I told you, once the securities and the share is issued, they will subscribe and pay for that capital. Then when they pay for the capital, the company needs to issue security certificates or share certificates. These share certificates are very important. Share certificates act as a ownership certificate. It gives a proof that you are an owner in a particular company. These certificates can also be used as a collateral whenever you want to take a loan from the bank. It has various methods of floating capital. As I told you, in new issue market or the primary market, you can either go for an IPO if it is for the first time, or else you can go for a FPO, that is a follow-up public offering. So you have two methods of floating. If you're going for the first time, you have to go for IPO. After that, anytime you want to issue, you have to go for a follow-up public offering. Because of primary market, we get a chance, that is the entrepreneurs get a chance to form capital in the economy. So if the entrepreneurs are not able to get loans from the banks, or if they are not able to get any type of savings or money from the relatives or any other lender, they can go to this primary market and directly they can offer their shares to the public. So when they offer the shares to the public, they are getting capital which they can use for productive use in the economy. So primary market helps to form capital in the economy. With this, I hope you have understood what is a primary market.